What is going on, Alpha Hunters? Hope everybody is doing wonderful this Wednesday. Yep. Hopefully you're having a wonderful day. The market is having a very mellow day. We had a nice little gap up here on the SPY. See, gapped up roughly 0.5%. We actually then continued to just trade down, just kind of opened higher, sold down all the way until about an hour ago. We got about a 0.2% negative, and then we've been in a nice little bounce here over the past 50 minutes. We are slightly negative on the SPY. Qs a little bit more negative. You see this huge red 5-minute candle start the day there on the Qs. Okay. All right. IWM. IWM first 30 minutes, very strong. Look at that move. All right. All right, nice move there on the IWM. The DIA, the Dow Jones Industrial Average ETF, a little bit more choppy. A little bit more choppy there in that first 45. And then it looked like it had about 30 minutes, maybe even an hour, kind of bearishness that kind of came in. And then it kind of chopped down at the daily lows for about an hour and a half, 2 hours. About last 30 minutes or so, 45 minutes, been a nice little uptrend. So, yeah, we've seen some bearishness across a lot of these indices. Even RSP, nice little bullish pop there, first 30 minutes, nice pullback. Then for the next 3 hours, kind of just choppy here recently around where the market opened there on the RSP. So, how is everything looking on the daily action? The daily RSP not getting above, was that Monday's high? Throwing a nice little upper wick. Nice gap up today. I have no idea why the market gapped up today. I don't really think it was anything. Maybe yields continue to fall. We'll take a look. DIA made another high over last Friday. Okay. Even though it's down from its highs and down from its open, the DIA did make a little bit of a higher high there from Friday. IWM, yep, we saw that huge upper wick. It shot up there, making a new high over Monday. Okay. Qs did not. Definitely not made a new trend high here. Kind of made sense they were getting some kind of bounce action here over the past couple days. They were getting sold off the most over the latter part of last week, from like Wednesday to Monday. They were definitely the ones getting hit the most. But they were up pretty good yesterday. The Qs, definitely being led by big tech. So, okay, quite a bit of a gap up there today, but just got sold off. Definitely the most negative one. Those indices. SPY has not taken out last week's high yet. It got really close. Definitely got up to those Monday highs on that gap up this morning, but definitely did not take out last Friday's highs. All right. So that's the quick rundown on the daily charts. Let me run through this real quick. I'm going to check. Since we're kind of not really moving so much, I want to see what the indicators look like on the daily for all of these. So SPY looks like, the indicators, MACD, RSI, starting to look a little rollover-ish. Q's definitely been rolling over a little bit more. They've definitely been flat up here for about a week longer than the SPY. Okay. IWM. Okay. IWM, it seems like it's starting to roll over a little bit. Q's. SPY. Just trying to see how things look. The DIA, the Dow Jones Industrial Average, nice. Look at that MACD looking really good. Man, that looks so good there on the MACD. Even the histogram here looks really well. A lot. I mean, it's holding up better than the Qs and the SPY. You know, you see the Qs and the SPY here. The histogram's really falling off. The IWM's actually held up pretty well. The DIA is holding up pretty good. So interesting. RSP. Yeah, the histogram is also holding up in a little bit of a lower low here on the hourly time frame. I saw that a little bit. You can see it a little bit on the daily, but it's a little bit easier to go intraday. You see a little bit of a lower high here on the RSI and the MACD, but we made a higher high on prices. So it's a little bit of a divergence there. So just kind of an interesting look. I just kind of want to look at things a little bit differently. All right. I don't know if the market's going to do a whole lot until we get to Friday morning. A big reason why, here's a look at the VIX. So the VIX not really doing much today, down a little bit. A big reason why is we're going to get non-farm payrolls, unemployment rate, Michigan Consumer Sentiment Survey, not really a big deal. But these two, non-farm payrolls and unemployment rate, yeah, unemployment rate, if this starts to get to like 4.2%, over 4%, I think you're going to start to see people investors are going to start to lean a little bit more cautious. Especially if one of these unemployment rates kind of come up and it raises like 30, 40 basis points. And it's like, ooh, like if this one comes in maybe at 4.1%, and then the next one comes in at like 4.5%, the one that we'll get in January for December. If that one comes in at like maybe 4.5%, that would be, oh man, that'd be interesting. Look there on the market or on some economic data. So the DXY, yeah, we've seen the DXY continue to turn up this week through a nice little upper wick there on Friday. You see Monday, Tuesday followed through to the bullish direction. Not doing a whole lot today. Kind of seems like it's just holding, resting. Past 4 out of 5 days, it's been up, and 3 of the last 4 days, it's been up pretty good. So, yeah, I'm gonna be really interested to see how this sets up. The one thing I would say for now, if this thing breaks this low that we put in back on November 29th, I mean, I'd imagine we're just going to be dropping. So maybe it starts to set up here to where it just kind of cools off, it retests it, and now it just sets up to roll over. Let me see where the fib retracement is. So the fib retracement's actually all the way back up to these lows right here. So I mean, we can make a lot higher of a run on a retracement. Okay. That'd be an interesting situation there on the DXY if we started to roll over. Gold up a little bit. Dollar's not doing much, so that's kind of an interesting look. Yields are getting crushed again. So they're about to come into a pretty good support and resistance spot. This spot that we hit in early March and early July, and then we bounced on a breakout. Like we broke out in August, and then we pulled back and bounced off that spot in late August. So about to come into a really important spot here on yields. I'd have a hard time believing the yields don't find some support somewhere to have a little bit more of a retracement, kind of like the dollar has. But let me take a look at the 10 and 2 inversion. So the 10 and 2 inversion is dropping off. So the 2-year yield's not doing much, basically. So the 2-year yield, yep, not doing much. It's actually even positive. That's interesting. So the 10 years continue to fall off. What about the 30? So so longer term yields continue to fall off, which is rather interesting because Well, if longer term yields, the ones that determine a lot of mortgage demand, real estate prices, if these keep dropping, and we start to see rent mortgage applications really tick higher because yields are dropping, and there was a report that came out about a month ago, or yeah, it was about a month ago, that if yields dropped, there would be a flurry of mortgage applications. And if you are one that's trying to buy a home, you're waiting for yields to come down or interest rates to come down. I would be locking up a home if you can afford it. Go get your home, go get your mortgage, and down the line, if years, a couple of years go down, and your interest rates continue to drop off, they drop off, back down to the low threes or whatever, below 3.5, then refinance your mortgage, that kind of stuff. But if yields kind of quickly snap down and then they bounce, and you miss that opportunity to buy your home at the lower yields that we're basically getting into, especially here over the past month and a half, that yields have been coming down quite a bit. Like you'd be kicking yourself. So if you're really wanting to buy that house, like you got to be taking this opportunity to be getting your mortgage rate locked in, and a couple years go down the line, interest rates continue to fall, then you just refinance. It's not a big deal. So, yeah, this is one I don't know if the Fed really wants to happen. That's the other thing. Like this continues to go back to lead to inflation. I don't really know if because this is the one the Fed can control, right? So I don't really know if the Fed really wants that, but we'll find out if that actually does lead to real estate demand ticking higher. HYG. Ooh, HYG. Man, this thing, it's setting up like it's about to explode higher. I mean, it's kind of getting volatile. It's getting pretty volatile, kind of compressed in here. It's kind of broken above these highs, so it definitely just seems like it wants to rapidly push higher. But the other thing is, it's not doing it. So I would give this thing maybe one more day. If it doesn't do it, I would take it off. Maybe even look a little bit more bearish here on the HYG. Because you saw how much those yields are really kind of dropping off. Except for the short term, which maybe is why the HYG is not continuing to push up. The 2-year yield, we saw that kind of a little bit more flat here over the past couple days. That's kind of what the HYG is looking like too. LQD continuing to push higher. This very much looks like the inverse of like 10 to 20 to 30 year bonds or treasury yields. So yeah, LQD looking pretty strong there. What about the TLT here? TLT, yeah, looks pretty aggressive. We saw those longer term yields really drop off here the past couple days. So TLT looks pretty good. I wonder if a lot of that has to do because of the bond situation in China. And there's about like if you haven't been paying attention, Evergrande or Evergrande, whatever, Evergrande, right? Let's see if we can find something. Evergrande. So if you haven't heard that they are about to go through a major possible bankruptcy thing, and if basically the debt holders don't agree to certain things, like to be converted over to equity holders, it's basically game over. Either way, it doesn't sound great at all. It sounds like investors are about to be at a lot of value, and this is no small deal. Like we're talking like billions of dollars. I don't see anything. This has been kind of a big deal. Like I see more of it like around I don't know, Twitter and YouTube. So I'm surprised it's not covered more here on like Finance Yahoo's homepage. Anyways, Anyways, maybe that's why you're seeing the flood into treasuries. People trying to just go to the safe spots. So that's why you're seeing like yields actually come down, because people don't trust the Chinese market. Is possible. Anyways, take a look at that sector rotation. That's a very interesting story. I don't really get into that as much, but if you've been paying attention to that, or I'd highly recommend paying attention to that, or check it out because it's kind of an interesting situation over there with Evergrande and um, what's going on with the bondholders of that company and the real estate and all that that's having to go on. Let's see, what was I? Oh yeah, sector performance. All right, so we got utilities leading the way, discretionaries also outperforming, industrials outperforming, healthcare, materials, real estate, communications outperforming on the day. Underperformers, financials, staples, tech, and energies. Okay, I'll take a look at energies. They seem to be down pretty good. Energies, they popped early on, and then yeah, you see them roll over. So without the gap, energies have definitely been volatile throughout the day. You can see utilities definitely leading throughout the day. Healthcare, staples. Ooh, all defensive sectors up at the outperforming the best performers of the day intraday, not taking into account the gap. And staples apparently had a pretty good gap down. Or maybe they just didn't have a gap down, or it was a very slight gap down, but they just haven't gotten sold off. Like it seems like a lot of other things have gotten sold off throughout the day. Anyways, so staples seem like they're holding up pretty good intraday. Discretionaries, industrials, materials, communications, real estate, all outperforming. Energies currently right now in line with the market. They've just kind of just been really volatile throughout the day. Grief. Financials and tech underperforming for the day. Okay. Okay. All right. Let's see what else is going on out there. Let's see here. Tesla's up pretty good. Energies. Let's go check out energies. Crude. Ooh. I was kind of talking about that yesterday, man. I was like, crude oil does not look good, especially after this day that we put in back on November 30th, where you look like you're setting in a pretty good, inverted head and shoulders. You get the shoulder, neckline, head, shoulder. Neckline, shoulder, looking like you're about to go break out, and you can even say maybe that's the neckline, and then it just gets crushed back down. Um, yeah, okay. Crude back below 70. Anything major here? Fed to cut more aggressively than expected in 2024. I was kind of curious to see if there's anything on OPEC. Okay, anyways, crude oil definitely dropping off. Gasoline dropping off. Yeah, that stinks. If you get the byproducts dropping off, heating oils dropping off, yeah, if you get the byproducts dropping off like that, that's not a good thing. So, I don't know what to. There's probably not much to do here. I wouldn't try to be a hero at all in the energy market side. Mostly because we've been in a pretty good downtrend. At least that's heating oil for a good while, right? For a good while, we just had a nice little summer bounce, and then here we are rolling back over. Gasoline. I mean, look at that. Gasoline's getting back down to the lows that it put in a year ago. The lows it put in a year ago. But yeah, it has definitely come down quite a bit from its highs that it put in about a year and a half ago. Crude oil had a crazy run at the beginning of the year of 2022, especially once Russia invaded Ukraine. Just a crazy spike there. Yeah, just definitely been running bearish for a while. Just had a pretty good summer rally and it's rolled over. Definitely seems like it looks like we're going to come take out these lows. Maybe get down to the low 60s. Oh my gosh, I hate that negative price metric that was put in back in 2020. It's really kind of a bummer. Man, if crude oil makes it back below 60, that'd be crazy. I mean, how long did it take it to go from 80 to 70? Well, it almost got to 80 last Thursday. It almost got there. So, yeah, it might not take long to see crude oil get back below or get down to that below 60 level. All right, AAPL. How's the big dogs, the big waiting? AAPL not looking the best. Nice gap up, very quickly sold down. It's definitely just been choppy, kind of down in the area it's been at today. Microsoft gapped up to the 10 daily EMA. To the 10 daily EMA is definitely sold down from there. Microsoft not looking all that great either. I'll be curious to see what happens if Microsoft actually does close below this 20 EMA. Because this just could have been a breakdown or change of trend. Here's the retest into the 10 daily, and so if we get going back in that bearish direction, we do have a pretty good pocket here down to that 50 EMA. So that's Microsoft. Let's see, Alphabet. Yeah, Alphabet's been getting hit pretty good, especially last week. I just don't, man. I look at this, past couple months here on Alphabet. I just don't like it. I don't like this kind of shape here. Breakdown. I mean, you got very much you could be in a kind of maybe a new run here. Maybe you're going up, maybe you're going down. But I just don't like this head and shoulders type setup that it kind of put in. Definitely more of a rounding top here. Yeah, I just don't know how much I like that. But these big tech names, man, they are very very concentrated. There's a lot of people into them. There's Alphabet, Meta. So Meta came down from its open. Oh, wow. Look at that whipsaw action there in the very, very initial opening 20, 30 minutes there. Okay. So Meta, I got nothing there. Kind of looks like a little bit of a bear flag, honestly. Kind of got like a little bit of a bear flag going on here. Amazon. Man, if these big tech stocks didn't have such a good day yesterday, they just wouldn't be looking all that great. Like especially here on Amazon. Amazon had a great day yesterday. Okay. So how is Mr. Bulletproof Tesla doing with the Cybertruck? They're up 1.5%. Nice gap up there on the day. Definitely been choppy throughout the day. If this thing doesn't break down soon, these moving averages are about to really push this thing higher. I mean, this thing needs to break down by the end of this week, or this thing's just going to be rising. And I'd probably even say if it gets above this high that it put in, you got 3 wicks here. You got today's wick, you got yesterday's wick. You even got this wick back over here on November 15th. So if it gets above, what was that, like 247 or so? What is it? Yeah, I would say 247. I would just be bullish on this for the time being. Nvidia, Nvidia getting smashed. Wow, that's pretty good selling throughout the day. Nvidia is down 1.5%. Okay, AMD, whoa, AMD down 1.2%. Nice. Wow. Wow. What's going on with semis? Trying to see if one of these guys had earnings. I'll have to go find them. On Semi is up a little bit, up 2% there on Semi. Intel's down. They're negative over 1%. Micron is about flat, down 0.25%. But they had a pretty good gap up, and they just got sold off too. Something's weird is really going on here in semiconductor. I mean, those are some nice gap ups on Micron, like right into that 10 daily. I'm sorry, Nvidia also just got sold off on the. Yeah, something's kind of fishy here. I mean, maybe some of these semiconductors will rally by the end of the day. They won't look as bad as they are now. Man, but for now, they look really bad. They almost say that something's about, like, we're about to get sold off big time on the market. So that's Intel. Okay, and then AVGO. AVGO, is that tomorrow or tomorrow earnings after the bell? AVGO. Okay. TSM. TSM's up 1.2%. Nice gap up, basically flat from the open. Okay. Texas Instruments, they gapped up, they traded down. Why did all these semiconductors gap up? But man, they just getting hit. Qualcomm. I mean, they're just continuing to sell down. They just look so much different than, the SPY or even the Qs, where it's been a little bit more sideways over the past couple of hours. But, Nvidia, AMD, they just continued to sell down here over the past couple of hours. Okay. Yeah. Something smells fishy. How are NOC I'm going to check some of these defense contractors. Looking pretty good. They actually gapped down. They got bought up on the open throughout the day. Northrop Grumman. LMT Lockheed Martin. Okay. Up a little bit. What's another one? It's LMT. Try Honeywell. They're up pretty good. HEI. HEI. Throwing a pretty large upper wick. GD. General Dynamics. Continuing to move higher. How's it? ANET. ANET. Nice gap up. Hasn't really moved too much. Up 0.5% on the day. Okay. Let's see. Sector. I want to check out the sectors. See how the sectors are doing. Everybody's pouring into real estate. XLRE. Real estate looking pretty good there. Materials. XLB. I mean, it had a pretty good run, but man, the past 2 days, the previous 2 days, this thing got schmackolaed. How's copper doing? Oh man, look at that move on copper. Everybody was talking about in November, man. Copper was making a huge move, but look at that past. I mean, today, yesterday, and Monday. Just man, they getting smacked. That's probably a big reason why the XLB is not performing all that well. How's silver doing? XLV. Did I just type in the SLV? Yes, I did. I thought I hit X. Silver down pretty good there over the past 3 days. Interesting. All right, XLI Industrials. Not looking too bad. Not looking too bad. Financials seem to be okay. Financials kind of up at that pre-regional banking issue price there on the XLF. XLE Energies, yeah, they look so bad. Utilities pushing higher. Healthcare pushing higher. Staples, yeah, did have a little bit of a gap down today. Wound up getting back up into this golden box zone. I would still just be a buyer. Even you're probably gonna have some short-term resistance here as it tries to get back through this zone. I would still just be a buyer. Discretionaries. Nice gap up there. Which is kind of interesting. Amazon have a gap up like that? They did have a gap, but they traded down. Tesla had a gap up, kind of hanging up there. So discretionaries seem to be holding up pretty good today. XLC Communications actually positive, had a nice little gap up, got traded down. Definitely trying to bounce. You can see it broke out above these highs from the summer. Broke out above those levels in mid-November, and you can see it came back here recently, kind of retested into those areas yesterday. Well, really just this week. That bounce is not really continuing to bounce, though. You want to see that bounce continue to bounce, because if it breaks down and gets below that, the bounce spot, well, then it's going to be the bounce isn't going to hold, and it's going to just break back down. Then it's going to look like a false breakout, and you're going to get people really to dump in on it. XLC Tech, or I'm sorry, XLK Technology sector. Yeah, look at that huge gap up, man. That thing just huge gap up got traded down. Sold off today. Man, down 0.5% there on the XLK. Man. Man. That is a weird one. Man, those semiconductors, they look so bad. I mean, outside of the gap up, they would be down probably like 2.5, 3% on a lot of those semiconductors. Health technology. Got some pretty good red or green in there. Also have some big guys that are red. Let's see, J&J. If there's anything you guys want to look at, let me know. J&J. Yeah, looks all right. Pfizer's just locked into this downtrend. Like, my goodness, man. All year, Pfizer. All year. My goodness. How much is this thing down year to date? 44% or so. Jeez. Down to those COVID lows. Man. It's brutal. MRK. Merck. Old Merck. Not looking too bad. Rosario. He said, "Did you catch Apple in the morning?" I don't trade the morning too much. I don't like the volatility. I don't. I'm not a big volatility trader, which is kind of an oxymoron because I know most traders prefer the volatility, and I know a lot of people that prefer to trade the morning because that's the volatility. Um, yeah, I definitely would not have caught that. A gap up that gets sold down as much as it did, like that. I mean, I honestly, unless you're playing like really aggressive and taking that 1 minute bearish, there really wasn't much of a good setup, in my opinion. Yeah, I mean, unless you were wanting to say, you know what, a lot of volume came in on a gap up, and then you gap up the day after a nice extension green, a lot of volume yesterday. I mean, you could maybe play that bearish, but no, I wouldn't have done that. That's a little bit more ballsy than what I would typically do. That was a good question, though. I mean, outside of that first, you can say 45 minutes or so, 50 minutes. It really hasn't done much. I mean, it's just been chopping sideways, and really even got into that range of first 30 minutes. It's kind of been in. I'm just curious on why the market gapped up as much as it did. Stocks step higher amid more soft jobs data. Okay. Let's see. Just kind of backing out on timelines here on the SP 500. Yeah, I mean, we've just been in kind of just this choppy, slow grind higher. Nothing crazy, but the Qs tell a different story. Qs were kind of choppy, kind of flattened out. Now they're rolling back down. So, yeah, I'm going to be really interested to see how we end this week, especially when we get that jobs data Friday morning. And we might not do much tomorrow because I imagine a lot of people are going to be looking at that jobs data because we are then going into next week, next Tuesday, right? We're going to get CPI Tuesday morning next week. And then we're going to get the Fed interest rate decision. So I'd imagine people are going to look at the jobs data that we get Friday morning, and then the CPI Tuesday morning. Basically, make a decision on what they think the Fed's going to do. Most likely, it's going to be a hold, but it's not really about this meeting. It's going to be looking at meetings, like what they think that it's going to happen down the line, which is a good idea. Let's take a look at that real quick. CME Fed Watch tool. So, looking like currently a hold. I mean, a hold's locked in. All right, everybody expects the hold. All right, December. I'm sorry, that was December. January looking like another hold. Now, it's interesting because March, May, this is when we get into cut time. The market is expecting the first cut in March. And a month ago or even 2 months ago, it was expected out in like June, July would be the first cut. So the market is either you got to think about why the market's thinking we're going to get cuts by the end of Q1, and is that really a good thing? It looks like May we would definitely have our first cut by the May Fed meeting, because May has a pretty good possibility of either being at our first cut or having our second cut by May. And then June, we would definitely have 2 cuts by June, possibility of 3. So that I mean, it's gonna be very interesting. So once we get to March, it's like cut. Well, I guess a cut two out of those 3 meetings. 2 out of those 3 meetings we were expecting a cut. Possibility of 3. Oh, and then you get to July, and then so March, May, June, July, 3 cuts out of those 4 meetings is by July, is basically what the market is currently expecting. So that'd be rather interesting, because as we know, when we came into this year, we basically had cuts in the second half of this year, right? In the second half, we were expected to start cuts, I think July or August, and then once we got to kind of the midway point, end of Q2, that was when all of those cuts got taken off the table, and we made that summer rally, right? We made that summer rally, and all those cuts got taken off the table, and we exploded higher. Mostly because it seemed like we weren't going into a recession, and we didn't, right? We didn't, but is it going to happen next year? I mean, that's what everybody keeps saying. I don't care if we go into recession. I don't trade economic data. I trade price action, but it's always beneficial to at least pay attention, at least have some idea of kind of what's going on with economic data. That way you're just ready. You're ready. You start to get the game plans formulating of, if this scenario happens, you can start to make moves, right? And you don't do it before it happens. You do it once it happens. It's like, okay, recession's gonna happen. Start to make portfolio changes and whatnot. Dear, Tesla's looking good. Man, consumer durables looking good. DHI. So home builders are crushing it. I know why, because long-term yields are really coming down. Whoops. Hit the DHI. Hit the keys backwards. So yeah, long-term yields coming down. Home builders looking really good. DHI, LEN. I mean, look at that. They're up 3.5%. Oof. Let's see. HM, PHM up over 2%. So yeah, home builders looking really good. SWK, Stanley Black and Decker up 2.33%. Outfunders, if you don't have anything else, quickly let me know. But yeah, I think tomorrow probably is going to be a quiet day. Also, I don't think we're getting anything of important information, but we'll still be here to see what's moving in the market. A lot of defensive rotation during the day today, and when we get to the jobs information that we get Friday morning, that will be kind of important to know. Non-farms payroll, unemployment rate. Those are going to be, I think it'll be unemployment rate. That's going to be the one to kind of watch, because if we start to tick up on that one, and if you haven't seen kind of how it's been looking here recently, I mean, we're starting to curve higher here over the past, several months, even just throughout this year, right? And once you start to curve higher, it doesn't just slowly grow, it explodes higher. That's kind of just the way it goes throughout any kind of recessionary type of cycle, So you can see all those times where we kind of bottomed and we started to turn higher, it just explodes higher. And that is what a lot of people are going to be really, really watching, is the unemployment rate. If the unemployment rate just all of a sudden starts to really ramp up here, especially December, January, March, because we're already curving higher. And if we start to see some rapid acceleration, you get 1 month where it pops. Let's see, what did we do back over here? So it went from, what is this? 5% to, what is that? 5.4%. So this one grew almost 0.5% back over here in 08. Right? And that was just before, from April to May of 08. So that was just before, like, as they say, the shit hit the fan. And unemployment at that point in time, you just saw it start to really accelerate, and then it never stopped. So we'll see what happens. Like I said, you can't really, make portfolio changes and assume it's going to happen. It needs to happen, and then you make the change. And it's going to be these will be quick changes on portfolio if they happen. It'll be like, I'm out, I'm back in. As long as you have the right, portfolio structure and setup, and you don't have to take a tax hit and all that kind of stuff. But if you don't have that, you don't liquidate. You just buy protection. You take the profits on the protection, then you reinvest it at the lower levels. So, Outfunders, have a great rest of your day. Take care, and we'll see what happens tomorrow, and then we'll see what kind of preparation we need to look at for Friday. Alrighty, take care, Outfunders.